Welcome everyone back to Pete's Investing. Today we look at the market wrap in terms of what's happening on global currencies, commodities, and also the world markets, share markets. So Asian stocks opened firmer after a boost to the US vaccination drive, which allied some concerns over the Delta strain's impact, lifting the US shares. But China continued its decline, the US dollar held a drop, and natural gas and oil steadied after surging. But always remember to review the Pete's Investing channel playlists, update every weekend, look at the charts, some select blue chip shares and some world share market indices. As always, click on the subscribe button, the notification bell, and like the video to support the channel. This is just our playlist for the strategies, and it shows you some key strategy videos to refer to. Okay, let's first get stuck into let's go here. World share markets, equities. The equities climbed in Australia, the US and England. US futures dropped and nudged higher after Wall Street extended a rebound on full approval for the Pfizer shot. And this raised concerns for prospect of more vaccine mandates to underpin economic reopening. The Nasdaq 100 reached a record high and continues to rise. China's top companies lost about $3 trillion this year compared to their peak value. Beijing's tightening control makes these companies' market value fall. Companies included pharmaceuticals, the internet-related and consumer businesses, and Beijing continues to strengthen supervision of all firms listed offshore. All internet firms wanting a foreign listing will have to apply to the Cyberspace Administration of China. Firms including DD, Alibaba and Tencent have seen their share prices tank due to the tightening controls. Regulatory crackdown by Beijing isn't just limited to tech firms, but includes real estate, education, online financing, and cryptocurrency, plus tech companies eyeing IPOs and even cloud computing. Next, we look at the commodities. They held a surge, including US crude and natural gas. Iron ore continued its downtrend with a late surge, but then it's fallen off again. And Bitcoin started down after gaining ground, consolidating over the past few weeks. Gold continued to trend flat and consolidate, but if the conditions in Afghanistan worsen, we may see a rise in the precious metals market. In terms of currencies, the US dollar-led currencies, the Swiss franc, the Japanese yen and Canadian dollar, continued their consolidation with late dips and before closing down for the week. While other currencies in our charts, the Aussie and New Zealand dollar, the euro, the British pound, continued a downward trajectory with late spikes upon closing for the week. Today we're going to be focusing on China as a trading exercise with average now results. This is a 15-minute chart, so you can see here it goes back about 5 months. The 15-minute chart bouncing off the trend line needs to break through this resistance to have a more positive outlook. You can see there our profitability for this has fallen down from $100,000 baseline. And we say we're losing, if you were trading this, you'd be losing on 5 contracts trading. You'd be losing about just over $25,000 if you were starting at $100,000 baseline. The daily chart, longer term has been more positive, although you can see here it's been falling off as per the 15-minute chart. It's been falling off since the start of 2021. It shows a negative outlook. And if the price continues down and breaks through this support line, it will likely reach the trend line around the 14,000 mark. And if it breaks down through this, then there will be more dire consequences for the Chinese index. That's it for today. Remember to hit the subscribe button, the notification bell, and like the video, and we'll speak to you guys in another video coming up soon. Thank you.